cash account is one of the most basic types of investing accounts you can have. Because of this, many new investors may start their investing journey by using a cash account. Think of it like using a debit card. When shopping with a debit card, you can only use the money sitting in your bank account to make purchases. With a cash account, you can only use the cash available in your account to buy investments. However, there is one key difference. When you place a trade, for example, if you buy a stock, that purchase will take 2 business days to settle, which is commonly called T+2 in the business. This is called the settlement date. If you don't have enough money in your account when you initially place the trade, you can still proceed with the trade and you will have until the settlement date to pay for it. Depending on the trade, there may be limits to the amount you can purchase in excess of your available cash, and you'll receive a warning if certain thresholds are exceeded. For more information about how to settle your trades, look at our video called Place the Trade, Here's What Happens Next. It's important to note that if you're depositing funds, like maybe from a personal check, then you may be restricted from buying investment with funds from that deposit until it clears. This could take a few days. If you're in a rush to buy something, depositing cleared funds is typically the quickest way. You can also use proceeds from the sale of investments to buy other investments if both trades settle on the same day or later. For example, if you wanted to invest $5,000 into a stock, but your account only has $3,000 available in cash, you can still place your order to buy your stock. To pay for the purchase, you need to ensure that the remaining $2,000 plus commission is covered by the settlement date of the purchase. You can either choose to make a deposit by the settlement date, or you can sell $2,000 worth of another stock on the same day. There's no need to wait, as both the buy and sell transactions will settle on the same day, 2 business days later. While a cash account is considered a basic investment account type, there's still a lot you can do with it. You can deposit and withdraw settled funds at any time. And you can trade and hold common investments like stocks, ETFs, mutual funds, and bonds. As you can see, a cash account is a flexible option for many investors, especially for ones who are learning to invest. There are a couple of important things to know before you start trading with one. For that very first trade, you need to have all the money for the transaction sitting in your account. This is called cash up front. For all trades that come after, you only need to cover the transaction cost on the settlement date, which, if you remember from earlier, is 2 business days after you place the trade. If you use your available cash to pay for all investments, then free riding will never apply to you. But if you do purchase a stock for more than the cash available, and you immediately sell that same stock without showing any intention of paying for the initial purchase, then this would be considered free riding. For any purchase you make in your cash account, it's important that you intend to pay it off by the settlement date, even if you choose to sell that same investment before the trade settles. If free riding does occur, there could be restrictions placed on your account that will require all trades to have available cash up front before any purchase can be accepted. A cash account is ideal for any investing goal, whether you're a new or seasoned investor. But if you're looking for more features like short selling or options trading, or you're comfortable with the idea of borrowing funds to invest, then trading on margin might be a better fit. To learn more, check out our videos on margin accounts.